Welcome to the Deep Dive. We're here to cut through the noise and get you the key insights. Today, we're diving into something pretty significant, the Q1 FY26 results from National Aluminium Company Ltd, NALCO. Now, if you haven't heard of them, NALCO is a Navratna CPSE. That's a special designation for high-performing public sector companies in India. Gives them a bit more muscle, financially speaking. They're a major player under the Ministry of Mines, and these results, they're fresh out. Our mission today really is to slice through all the numbers, the jargon, the official reports that always come with these things. We've got the press releases, the financials, the notes, all the source materials you provided. And we're going to pull out the most important bits, the surprising facts, just for you. Think of it as your quick guide to understanding what's really happening with this Indian industrial giant.
And it really is significant. And NALCO isn't, just another company. They are a leading producer and exporter, aluminium, a major force. So when NALCO reports Q1 results, it's more than just their own books. It's a crucial snapshot. Gives you a sense of the health of a really vital industrial sector and its impact on India's wider economy. These numbers definitely make waves beyond just their balance sheet.
Okay, right. Let's unpack this then. The headline figure for Q1 FY26 is, well, it's eye-opening. Net profit soared. Up 77%, that's Rs 164 crore. Compare that to 601 crore same time last year. And revenue from operations, Rs 387 crore for the quarter. That's a massive jump, isn't it? Is this just a blip, or is there something more solid driving this?
Yeah, that's the key question, isn't it? The numbers are impressive, sure. But what's really interesting here isn't just that they grew, it's how. It seems they built this performance on, well, several fronts. The CMD, Shri Brigender Pratak Singh, points to a few things. A strategic mix, really. Tightened cost controls, efficient operations, that's one piece. Then there's capitalizing on India's booming domestic climate, plus significant increases in actual production volumes and overall improvements in their what they call techno-economic parameters. Basically, they're getting smarter about everything, raw materials, energy use, just squeezing out more efficiency. It's just, a well-managed, multi-pronged success, not just luck.
And looking at those operational specifics, the increases are pretty remarkable. Compared to Q1 last year, bauxite transportation, that went up 6.56%.
Okay.
But then look at production. Alumina hydrate up 35.5%. Calcined alumina, an incredible 52.25% increase. And aluminium cast metal up 2.68%. These aren't small adjustments. These are, well, substantial boosts across the board.
Right. And then shift over to sales performance. The figures there are just as strong. Export of alumina surged by 209%. Huge. And domestic alumina sales up 190%. But here's a really interesting nugget. The aha moment, maybe. NALCO didn't just have strong sales overall. They actually hit their highest ever domestic sales for both alumina and aluminium in Q1 FY26. Highest ever.
Wow, highest ever domestic sales. That really says something about India's internal demand, doesn't it? Like the country itself is just incredibly hungry for aluminium right now, and NALCO is stepping up to meet that need.
Absolutely. It points to really strong market demand and, crucially, NALCO's ability to capture that demand, especially right there in their home market. And speaking of good news, it seems shareholders have something to smile about, too.
Yes, definitely. For anyone holding shares or, just interested in dividends, the NALCO board delivered. They've recommended a final dividend, Rs 2.50 per equity share. That's for the financial year 2024-25. So for every share with a face value of Rs 5, you get Rs 2.50 back. That's a 50% payout. Totals up to over 459 crore rupees. Pretty healthy.
And connecting that to the bigger picture for shareholders, this final dividend, it's actually on top of two interim dividends they already paid. Those were Rs 4 per share each. So that's Rs 8 per share already paid out during FY 2024-25. So assuming shareholders approve this final bit, the total dividend payout for the year will be quite substantial. Rs 1928.46 crores.
Yeah.
That signals pretty solid financial health, a good return for investors.
Okay, stepping back a bit. The CMD, Singh, he also gave some context on the wider economy. He highlighted India emerging as, well, the fastest growing major economy globally. And that's creating real momentum in the aluminium sector. Demand for aluminium, he said, is climbing at about 9–10% annually right now. Robust. He even looked ahead, projected that by 2030, aluminium use in India could hit 7.5 to 8 million tons a year, driven by transport, construction, electrical sectors. I mean, that's a huge forecast. But even with that strong tailwind, are there potential, challenges, headwinds NALCO might face?
Oh, absolutely. I mean, the market looks favorable, yes. But companies like NALCO always have to deal with things like global commodity price swings. That's a constant. And actually, those unresolved power agreements we'll touch on later, they could become a bigger factor, long-term cost strategy. But to your point about growth, what's interesting is NLCO isn't just, talking about the market opportunity. They're actively pushing forward with their aluminum refinery expansion and working hard to get the Patangi bauxite mines operational. So these strategic moves, they clearly show NLCO's committed to keeping this momentum going and meeting that rising demand.
Right, so they're definitely planning for growth.
Yeah.
Makes sense. But for a company this size, it's not just the big numbers, is it? It's also about governance, transparency, making sure things are done right. And on that note, the board made another key decision, appointing new cost auditors for the next financial year, 2025-26. The firm is Mrs. BSS and Associates.
Yeah, and just to give a quick profile on them, BSS and Associates, they're an established firm. Seems like a solid choice. They've got a decent-sized team, broad expertise, including cost audits, obviously, and they've done work for various public sector units, private companies too, across different industries. So they seem to have the relevant experience for what NALCO needs.
Okay, so we've seen this really impressive core performance from NLCO. But digging into the details, the auditors did flag something, an emphasis of matter. Now, that means it's something important they want to draw attention to. Doesn't change their overall opinion on the financials, but it's noteworthy. In this case, it's about NLCO not recognizing revenue from 2 wind power plants in Rajasthan. Why? Because a fresh power purchase agreement, a PPA, hasn't been signed since way back in April 2019, and the whole issue is tied up in court, sub judice, before the Rajasthan High Court. Now, this isn't just a small legal thing, is it? It raises questions about energy strategy, about leveraging their own green assets. It's kind of a subtle but important counterpoint to the otherwise great quarter.
Exactly, and it's a similar situation with their wind plant in Gandikota, Andhra Pradesh. The power generated there is being transmitted to their captive plant in Angul, Odisha for their own use. Again, because there's no PPA in place there either. So it really does raise an important question. NALCO's core business, clearly booming. But what about the long-term resolution or maybe lack of resolution for these PPAs? How might that impact their future energy costs, their revenue streams, even their sustainability goals, given the push for efficiency? It's something to watch.
Right. And we've mainly talked about NLCO's standalone results, their core business. But it's worth remembering they're also part of a bigger picture. Joint ventures. Think of it like NLCO itself, plus its stakes in 4 other companies: National Aluminium Park, GACL NLCO Alkalis and Chemicals, Utkarsha Aluminium Dhatu Nigam, and Kanij Bidesh India Limited. So while NLCO's own profit was that Rs 1063.86 crore, when you add in the results from these partnerships, the total consolidated profit comes out slightly different. Rs 1049.48 crore. So the joint ventures adjusted the overall picture a tiny bit, but yeah, the main NLCO business is clearly the engine here. So let's wrap this up. What's the bottom line for you, the listener?
Well, the main takeaways from this deep dive seem pretty clear. NLCO had a really impressive Q1 FY26, a big profit surge driven mostly by operational efficiency and booming domestic sales. They really capitalized there. They're also looking after shareholders, generous dividend payout, and strategically they seem well positioned for India's growing appetite for aluminium. It's a strong story overall.
It is, but maybe a final thought to leave you with. Considering this very strong Q1 and their clear plans for expansion, what implications might those lingering unresolved power purchase agreements for the wind plants actually have down the line? For NALCO's energy costs, yes, but maybe even for their broader environmental strategy, especially with that commitment to sustainability. It's just a detail, But it reminds us that even with great results, there are always layers, always other factors beyond just the quarterly profits that contribute to long-term success. What other factors might you think about when looking at a company's real potential? Something to consider.